you still have um, this balance between technology, which there's a ton more technology in factoring now, as I'm sure you can imagine. I was mentioning recording clients on whiteboards or Google Docs. Everybody's working out of systems now.
Hey everyone, thanks for tuning in to another episode of the Freight Caviar podcast. Before we dive in to our latest episode, I want to tell you a little bit about Epay Manager powered by OTR Solutions. Stop wasting time digging yourself out of an overflowing inbox filled with mismatched paperwork, invoice disputes, random pictures of steering wheels, fingers, and who knows what else. Epay Manager eliminates the email invoice mailbox BS once and for all. After more than 2 decades working with some of the industry's largest 3PLs and handling billions of dollars a year in carrier payments, Epay Manager, now powered by OTR Solutions, is here to reduce costs, streamline your back office, and nearly eliminate carrier disputes with their audit-proof invoicing features. And yes, it's better than the other option. With a robust list of broker TMS already integrated with Epay, getting set up is a breeze. If you want to learn more, check them out at otrsolutions.com/freight-caviar or text OTRFC to 80483 to see what they can do for your business. Clayton Griffin, Executive Vice President and Chief Strategy Officer at OTR Solutions and Epay now. Welcome to the show.
Thanks for having me. I'm glad to be here.
Yeah,
Glad to be chatting today.
definitely. This is exciting. OTR Solutions just acquired Epay not too long ago, so we'll dive into that. Before we do so, I definitely want to just get your background, kind of tell the audience who you are, where you're from, all that stuff. You just mentioned right before we got on that you're 34 years old and that you've been at
Not
OTR for
quite.
not quite, almost at the end of the month. At the end of the month.
I'm holding on to another week or so of being 33, but yeah, 34 here shortly. Herschel Walker is creeping up on me quickly. So
Okay. So you've been at OTR since 2012, which is going to be 12 years, and you went straight out of college. You went to OTR. Can you tell us a little
yep.
bit about your background and how you ended up at OTR?
Yeah, absolutely. So I'm from a small town in South Georgia, just south actually of Valdosta, Georgia, which most people wouldn't know, but I'm sure a lot of people that listen to the podcast might, just because there's a decent amount of freight coming out of the 229, but about 5 miles north of the Florida Georgia border. So I grew up there, went to University of Georgia, got a finance degree, and then kind of shortly after graduating was looking at options. Knew kind of I didn't want to go the investment banking route. Knew I was trying to avoid going the kind of commercial finance route and sliding into a bigger organization and kind of having the predetermined career path and steady progression. I was looking for something that was a little more entrepreneurial, something where I felt like I could make uh, a more immediate impact more quickly, and just honestly stumbled upon OTR. So, we were officed at that point in Marietta. We've since moved to Roswell, which is, both are in the suburbs, 15 minutes of each other from Atlanta. So, was a quick kind of jaunt over to interview. At that point, it was basically two large cubicles that they had shoved, 3 or 4 desks into. But at the end of the day, had conversations with Fritz and Grace and a couple other people that were kind of there already. Grace was kind of handling our HR and hiring duties at the time, as you do when you're a small business, right? You wear a lot of hats, and just love the team, love the mentality. We were tiny at that point, the definition of a startup. The business model itself is super straightforward. You don't really study specialty finance in at least then University of Georgia's finance curriculum. But the business model is simple, right? I was more impressed with the mentality of the group and kind of the vision that they had for the business. And it really gelled with the way that I thought about things and kind of the concept of taking something from essentially nothing and building it into a market leader. So that's always been our goal. How we got there, was step by step, and especially for the first several years, really just grinding it out.
Yeah.
I remember my first day I came in, and my roles and responsibilities included, filing things in filing cabinets. And I noticed that one of the first thing I noticed on the wall was probably a 6 by 3 foot whiteboard. And we had in kind of dry erase marker all of our clients' names. So all the carriers we worked with, you can't fit that many names on on a 6 by 3 whiteboard. It was probably 20 or 30 at that point. And, you know, young college grad come in, and my first suggestion was to move that from a whiteboard where literally it was alphabetized. So when we brought on a new client, we would have to squeeze 2 clients' names or 3 clients' names where 2 were before, right? You'd erase the 2 and then squeeze in the 1 that was fit in between, was to move that to Google Docs. So, it's not always pretty, but you just do the things that you have to continue to get the data on and service
Yeah.
clients. And that's kind of what we were really focused on. So yeah, no experience in transportation or logistics, no supply chain classes, although, they're offered at Georgia, but really just stumbled into the business and fell in love, I think, with the people. And then I think obviously the industry and the opportunity and the complexity and the nuance that we all kind of know and love about logistics.
Sure. I feel like the majority of us stumble upon logistics. No one
Yeah,
like sets off like I'm going to be a logistician or I'm going to be a freight broker. It's like,
there are a couple legacy,
uh,
either trucking legacies or brokerage legacies, but
sure.
by and large, it's people that are unfamiliar and get in and
Yeah.
just get hooked on it. There's
Yeah.
so much going on. There's so much to keep you busy. There's so much you can
Definitely.
focus on.
What I love about this industry is like how massive it is.
Yep.
If you're able to service it properly, like the market is like you can never conquer it all. It's so diverse and it's like fragmented. So there's so many opportunities, right? And I have a feeling that like in 2012, the factoring market was so different than it is now. There's probably so many fewer players, I believe. I'm wondering if you could kind of tell us a little bit about how like the market, the freight factoring market has evolved over the last 12 years. Like how was it back then and how is it like now?
Yeah, I mean, that's a great question, and it's changed a ton, obviously, just like brokerage has, just like trucking has. But factoring, the reason that we kind of saw the opportunity to get into factoring was that we felt like we could provide, like I said, the business model is relatively straightforward, right? As far
Hmm.
as providing capital to truckers in order to, get them through where they would ordinarily be waiting 30 or 45 or 60 days. It doesn't take a rocket science to know how to do that. But where we felt like we could provide additional value was better service, better responsiveness, doing the things essentially that we felt like a lot of the other players in the industry weren't doing, right? The simple stuff that, I mean, even now, like when I call Delta or when I call a customer service department and I really want to get something done and I've tried to use chat and that's not working, or I've tried to use email and that's not working, you know, it pisses me off if I have to sit on hold for an extended period of time, or if I go to a voicemail. If you can't get to a human when you have an issue that you deem relevant, and really that's all that matters, right? Like the customer
Hmm.
deeming it's relevant or time sensitive, and everything in logistics is time sensitive, or everybody thinks it is. And so we just really focused on doing the small things, right? Picking up the phone with our clients called, being willing to sit there and talk to them for 30 minutes when they were a small client, right? For these owner operators and the 2 truck operations, that was our core focus. And traditionally, it had been a transactional type of relationship, right? You send something to me, I send you money. That's the nature of our relationship. Anything else, it's kind of like, go ask somebody else. I don't really have the answers for you. And so we were really trying to be, a consultant isn't the right term, but certainly someone that they could ask questions on, because there is so much going on. And there's a severe lack of information dissemination within the industry, especially in that long tail. And so what that gave us was the opportunity to learn really, really quickly, because we were willing to talk to the people doing the work, right? We picked up the phone and we had conversations with truckers and we learned their problems and they communicated with us. And, they saw us as a partner. So that I think has changed a little, although, you still have this, um, this balance between technology, which there's a ton more technology in factoring now, as I'm sure you can imagine. I was mentioning recording clients on whiteboards or Google Docs. Everybody's working out of systems now, whether it's proprietary or off the shelf. They're leveraging some aspect of automation, I would imagine, although that's an area we've invested in heavily. So technology is a much bigger piece. But I think the balance between, and this is what we've always tried to strike. And so I kind of want to answer your question in a short way, is that the way we approach the factoring market, I would say, hasn't changed a ton. We've always been really focused on deploying technology and deploying efficiencies where we can. But the result of that is to get more time and opportunity to provide value to clients, right? To have more conversations, to, put our human resources on calls with clients instead of having to go through and process invoices all day, every day, when we feel like we can put some technology to work. So, we were burning through a ridiculous amount of paper back then. It was like reams. People had little boxes of paper stacked up on their desks that they were just feeding their printers on a regular basis. We were receiving mailed originals, which is still something that happens to a certain extent, but obviously much less of a thing now. So a lot of that digitization has manifested itself in factoring, just because it allows you to get liquidity much more quickly. The more quickly you can get that stuff processed and approved and verified, the more quickly you can get money into people's hands. So that's a big focus for the industry. You've definitely seen, interest rates up until obviously a couple years ago were near zero. And so you had a lot of people jumping in the industry and joining kind of the factoring community, if you will. There's a lot of good education on factoring out there. We learned the hard way, but we were also going to conferences and learning how to file a UCC and learning how to do the things that are like core to making sure that you're protecting yourself. So, getting in, it's similar to, there are some monetary requirements, right? You have to capital for factoring companies, at least that are focused solely on factoring, is kind of their hamburgers to a McDonald's. You have to be stocked with a bunch of money in order to provide certainty and confidence to your clients, right? There can't be a day where they send you an invoice or they bill you for something and you don't have the liquidity to provide it. So that's still something that is kind of, or I should say, has manifested itself as not a concern, but certainly a consideration, I would say. We've gone from 0% interest rates to significantly higher, which conversely, factoring rates have generally trended downward, right? It's gotten more competitive as factors have been able to drive more efficiency into their operation. They're passing that efficiency effectively down to clients, carriers, or brokers, because they could run their operations cheaper. It costs them less to buy it. What we haven't seen is, as interest rates have risen, factoring rates have not risen, which is an interesting kind of connection. Which you would, when you look at mortgage rates and you look at other things that are generally tied to interest, you might see them increase as interest rates increase. But it's super competitive. It's more competitive today than it's ever been.
Yeah.
Which is one of the reasons that we're continuing, like I said, to keep our focus on providing value where our clients tell us that they want to see it, right? Is it small things or is it large things and new products? That's always been the focus. But yeah, a lot of smart people in the industry, a lot of people doing a lot of really good things. So just like the rest of the areas of the industry, there's a lot of competition, and we're always focused on continuing to get better. I think we're a highly competitive group. So it's something where we're always considering, hey, what is everybody else working on? How can we continue to get better?
Hey there, amazing listeners. If you're enjoying what you're hearing on our podcast, we need your support. It will only take a moment, but it would mean the world to us. Please make sure to hit the like button on this video, subscribe to our channel, and don't forget to share with one of your friends that would enjoy our content. Your engagement helps us reach more people and bring more awesome episodes to you. Thanks a million, and thanks for being part of the podcast community.
I have this feeling that some people don't realize how difficult it is to be like a freight factoring company. Because like you're only making a few percentage points, but you're like doing so much work. You're essentially a bank, you know, at the end of the day, like so you need a lot of capital. That's something you brought up. And like early on during the early years, like I don't know, like the trust isn't really there because like it's like, well, will you pay me quickly, like consistently? It's kind of like working with a freight brokerage at the beginning. Like trucking companies are kind of hesitant because like you don't have a credit score.
There's
Like
no
I don't,
goodwill, right?
yeah,
Like, and if you mess up once, if you don't
yeah,
fund them once, if you don't answer the phone, if you mess something up, if you short pay them, you've degraded that goodwill with a client, and they don't have anything else to go on, right? It's not like we were an industry player back then where someone could say, hey, they have a proven track record of
hmm,
doing right by their clients. We had to grind that reputation out of the dirt,
yeah,
and reality is doing all those little things and making sure that, like, no matter how menial it might seem to, an hour or minutes, or if it matters to the client, it matters. And that's really all there is to it. And so we take that very seriously. It's something, as we've scaled the business, we've continued to try and make sure is a priority. Because we know the smaller organizations, the guys who are approaching it the same way that we were 10 years ago, we're conscious that they're in a different position than we are now, and we have to recognize that we can't slack off our level of service, or we can't slack off the value that we're providing, and rely on our name. It really is continually having to come in every day and prove ourselves.
definitely. And you did bring up, Clayton, the fact that like interest rates rose, but yeah, like the factoring rates haven't risen. And that is like interesting point because like can you kind of like tell us why you think that is? It because there's more competition right now? Like why wouldn't the rates for factoring rise?
Yeah, I mean, at the end of the day, the market is what the market is. So if the short answer is, there just hasn't been an appetite, especially by some of the bigger players, to raise rates. And so if you have people that are willing to, it's kind of like, what we're seeing with freight rates now, to a certain extent, right? If you have, at the end of the day, the market is set by the people that are willing to buy or sell at a certain price. And so if you have people that are willing to sell their product at a certain price, sell their truck, for instance, at a certain price, or sell their factoring services at a certain price, that's the market.
Yeah,
And if it doesn't really matter if costs have increased, or all that, it just doesn't matter at the end of the day,
yeah,
because the client is going to make the best decision for what is them. And I think you've seen that in brokerage to a certain extent too, right? You've had this market setting by some larger players at discounted pricing, I would say, that has kind of affected the industry to a certain extent, or certainly some relationships. And so, that's a beautiful thing about our industry, is that it really is a an industry and a marketplace of buyers and sellers. And so,
yeah.
the short answer is, you haven't seen people willing to sell their product or you still have people that are willing to sell their product for the rates that they were selling before, or even
Yeah,
potentially cheaper.
definitely. And the factoring market's been a little bit more fragmented than it used to be. So I guess because of that, uh, people are more competitive. And I know with like OTR Solutions, you've been continuously evolving throughout the 12 years. Recently, you acquired Epay. I'm kind of like curious to hear what like I actually never heard of Epay beforehand before you acquired it. So
Yeah, I don't
I'm
think many
curious.
people had, which we
Yeah,
actually kind of liked. But
yeah. What is Epay and why would OTR Solutions like acquire them?
yeah, so I can give you kind of a quick synopsis, but before I do so, Epay Manager is effectively a back office automation tool for freight brokers. So everything kind of from post load delivery, once kind of the load's been delivered, everything from document collection to invoice processing to carrier assignment to quick pay facilitation to carrier payment and remittance, is handled within their ecosystem, and has a bunch of workflows that have been built and iterated over time. So when I first started at OTR, my role was collections specialist. So that was my initial role. So I was responsible for making sure that we were getting paid on the invoices we were purchasing. And funny thing about it is, when we started going through the diligence process with Epay, they were familiar with me because I was the name of record. I haven't done that in a while, been involved in that process necessarily, but I was the name of record that they had stored in their system back from 2012, 2013, 2014. So they've been around a really long time, but they've just kind of flown under the radar. We kind of viewed them as a bit of a diamond in the rough. And the more we dug into their client relationships specifically, they've had brokers, large brokers that have been in platform for 10 plus years, longer than really back office brokerage solutions I think anybody would have thought existed before before then. And so that was super attractive to us. But if you think about what we've done traditionally as a carrier factor for the first 7 or 8 years we were in business or longer, we've always dealt with freight brokerages, right? They've always been a counterparty to ours. We've always been in constant communication. We've always tried to have really good relationships and honestly provide value for them, right? Instead of dealing with 1,000 or 5,000 or 10,000 or operators or two truck operations, we're consolidating that experience from a billing and collections perspective into one rep, which we feel like provides some value and hopefully some validation for freight brokers in our core business. So we've always had a good relationship with freight brokers, despite, some of the turmoil that's been in the news over the course of the last several months and years. We work with, 7,000 freight brokers on a regular basis, and we're constantly in communication with them. And so a couple of years ago, we looked at deploying working capital into freight brokerages, basically trying to aid them in scaling their business and professionalizing the payment aspect, right? The carrier payment bespoke from the rest of the workflows, right? Nothing to do with kind of invoice automation and things of that nature. Really just, hey, you want a more seamless way to pay carriers, you want to do it in a digital way, we can be of help here because maybe you have shippers who pay in 60 or 90 days. You want to pay carriers in 28 days. We can kind of bridge the working capital gap just like we are for carriers, because brokers experience the same thing, right? As far as working capital is concerned in a lot of cases. And so what Epay does is effectively make that product offering much, much more robust and complete to the freight brokerage marketplace. They've been doing it literally since the turn of the century. They were founded, I think, in like 1999 or 2000.
Wow.
by an owner of a trucking company and a freight brokerage, right? And so there is this intrinsic knowledge that's baked into the system. Obviously, they do not, nor do we, own a freight brokerage or a trucking company today. But there's so much, and what we've learned, we started building our factoring technology probably in 2013 or 2014 to run our back office. And what we found is that there were a ton of similarities in approach between how Epay approached automating the back office of freight brokerage and how we approached automating our back office as a factoring company, which effectively is automating a carrier's back office. And at the end of the day, as far as technology is concerned, we also realize that time is an extraordinary benefit when it comes to making viable technology solutions, because it gives you an incredible amount of time to listen to customers and make changes. So I think they released Epay kind of first iteration in like 2003. And they've literally been updating it and changing it and adjusting it and making it more configurable for their brokerage clients for literally 2 decades, which is just an incredible amount of time to be able to listen to customers and build the configurations, right? Because the way they've approached it is when a broker of theirs has come and said, hey, I need the ability to change the way that we're paying carriers based on a customer relationship. If we have a customer that's paying us more slowly and we want to have bespoke payment relationships with carriers, for instance, right? And there are thousands of these. They've made that configurability able to be deployed at scale for any broker. And so there's this level of customization that can go in, which we feel like is unique. And the way that they approach it, and I can dig into that a little bit, but I'll stop talking for a sec, is just a little unique than the other products. And we feel like it provides more upside from an automation perspective. It provides more transparency to carriers and factoring companies, to be honest, because there's a lot of factoring companies that are counterparties in Epay that are going in to get information and invoice Epay brokers. So it really was that control over the back office without having to deploy a ton of human resources that attracted us to the product. And then the team is fantastic. I mean, I talk about it's a small team, but they've all been there for 20 plus years. So
Wow.
like, once again, it's just this intrinsic knowledge that they have and the number of brokers that they've talked to and the situations that they've, dived into. They've seen great freight markets. They've seen really shitty freight markets. Maybe not as shitty as the one we're in currently, but that's a different story. But nonetheless, everybody's looking to save on costs where they can in back office. And we feel like Epay is a really good comprehensive solution to be able to do that.
Okay. I'm curious because like the main reason for Epay Manager acquisition was to be more involved with the freight broker kind of factoring side of things, right?
And not necessarily we can use Epay as a means to deploy capital to freight brokers, but it is not a
Oh,
necessity of using the Epay platform.
got it, got it. And because you mentioned just a while ago that you were doing just truck factoring for like 7 or 8 years at OTR, and then afterwards you added on the freight broker factoring, right?
Yep.
And a lot of factoring companies typically don't offer freight broker factoring, or if they do, it's usually because you have a trucking company and they factor both. Like I once had a
Yep.
brokerage for a few months and I was trying to get set up for factoring and like, I was calling all these factoring companies, everyone was turning me down.
Yep.
Because it's a lot more complex, right? Because you're dealing with like shippers to get paid. Um, why is it that like there are not that many companies doing like freight broker factoring? I've always been kind of curious as to like there's like the complexity issue, but like is there more than that?
I mean, that's the primary reason. So when you look at kind of standard carrier factors, generally speaking, they're going to be dealing with small to medium-sized carriers who primarily work with freight brokerages,
Mm-hmm.
right? And a core component of freight brokerage is carrier payments and having an accounts payable team. And so there's a lot of infrastructure and credit reporting built around freight brokers, and it's easier to make credit decisions. It's easier to invoice. It's easier to know who to go
Yeah.
to if there are issues because there's infrastructure built around it. They're built to be a carrier payments machine. I mean, that's a
Yeah.
core aspect of how a freight broker operates. When you look at shippers, generally speaking, unless you get up into the larger shippers, carrier payables or just transportation in general is an offshoot of what their core business is. And
Mm-hmm.
so that leaves you to deal with someone who is maybe not as much of an expert, or they don't have as much infrastructure built around that. They might be doing two different things and they handle carrier payables when they come across. And so there's just less structure around those shipper relationships. I also think just in general, um, you know, it's tougher to get what a factor would call kind of verifications with shippers because it's just not core to the business. Factoring is not as prevalent in brokerage. And so a factoring company calling a shipper and being like, "Hey, I'm working with XYZ broker and I need to verify that you're going to pay invoice 1234" is more of a unique conversation than you would have with a broker. Like, we have
Sure.
those conversations with freight brokers all day, every day. We would prefer to
Mm-hmm.
not have them and instead pass the data back and forth, which is another benefit of the Epay platform, is that level of
Okay.
connectivity. But it really is that structure and the fact that it's just much easier. It's from a credit perspective, it's easier to glean information and credit risk on freight brokers than the general shipper market.
Definitely. That's definitely like an interesting topic for me just because I don't know. I found it interesting when I was calling freight factoring companies and everyone was turning me down. It's like, oh, if you have a trucking company, we could factor both, but if you only are a broker, we're not going to factor you. And that's like,
Yeah, there's also, I think people have this, if they think there might be a trucking, double brokering is extraordinarily, it's gotten a ton of news over the course of the last couple of
yeah.
years. And so there's this concept of, if you have a broker or you have a trucking company and they're related entities that you could be passing back and forth loads to and retendering to them to other carriers. And so
Mm-hmm.
there's this concept that if you are working with the brokerage, you want to be working with the carrier just so you have visibility into both and that type of
Got
shuffling
it.
around is happening from a credit perspective. But I think just dealing with intermediaries just requires another aspect of contact and communication. I also think this concept of having the infrastructure to be able to execute on a brokerage factoring deal is different, meaning there's no real payables aspect to a carrier factoring deal, right? Because you're paying everything in real time. You're purchasing the invoice, you're paying the carrier, you're collecting from the broker, the shipper, whoever the customer is. In a brokerage factoring relationship, you're billing the shipper, and then you have this pending payable to the carrier. And so just from like a technology and an execution perspective, it's a little different because that pending payable has to sit there. You have to have functionality to allow the broker to have control over that, because ultimately it's their decision on when and if the carrier gets paid or for how much.
Yeah.
So there's this concept of like most of the out of the box factoring softwares are not going to include that brokerage model or module, if you will.
Yeah.
We kind of built that in house when we decided that we wanted to pursue brokers as kind of clients. But that's probably another reason that you don't see it quite as often.
Yeah, you brought up an interesting point that I actually think about, because like when a carrier factors with a factoring company, you just invoice the broker, you pay the carrier. Whereas here, like the broker is like a middleman or and then like you have to invoice the shipper, and then you're essentially allowing the broker to like release the payment for the carrier. But like you're the one that's paying the carrier. Like your funds are paying. Yeah.
Yes.
Yeah.
In our relationships, I think, we brought this up when we kind of released that white paper last year. There's some other relationships where at the end of the day, when you think about factoring, it's just a form of, and you mentioned this or alluded to it earlier, it's just a form of kind of asset-based lending. The asset is the invoice, and we're borrowing, I should say, we're buying the receivable and providing the liquidity to the broker. So it is not lending, but it is very, very similar to how a bank would think about their asset-based lending group. And so for carriers, that's an effective way to think about it, because a carrier is the ultimate end person that needs to be paid, or business that needs to be paid. And so ABL and freight brokerage is an easier, without having to do all the nitty gritty stuff that I was just describing around paying carriers and dealing with shippers and verifying rates and collecting and applying cash and all that stuff. You can get money deployed to brokers much more quickly in like an asset-based lending or a supply chain finance type of arrangement. So we do supply chain finance, which is effectively just giving a freight broker, not dealing with a shipper direct, but just giving a freight broker terms to pay back. So extending the terms through which they would pay their freight bills. But that's another, at the end of the day, banks are not built to factor, because it is a very transactional heavy process.
Yeah.
And so the real meat and potatoes of what differentiates factors and banks is the ability to underwrite the collateral on a piece by piece basis, instead of banks will amalgamate it all together and say, hey, you got $5 million, I'm going to give you $4 million, you do with it what you please. That's more of a banking transaction.
Sure.
Factoring would be, hey, you've got $5 million in invoices, they're all $1,500 a piece. We got to do some legwork to make sure that everything's good to go, and then we'll advance you a higher rate than maybe the 4 million. But there's a level of collateral underwriting that comes into it that you don't see in those kind of banking relationships.
Sure. I'm not a good finance person. I know you are, Clayton, because you finished finance. There's a few topics that I actually want to bring up here. Okay, so you acquired Epay, like what, it was like a month ago, I think, or maybe a couple of months ago.
Beginning of the year, yep.
Beginning of the year. Okay. So like, what are your plans like moving now forward? You acquired the team, you're kind of like implementing everything in, like, well, how does that look like right now, like in terms of everything that we just discussed?
Yeah, I mean, we're having a ton of conversations and meetings and demos with freight brokers currently. We think it's compelling, and we've gotten really good feedback so far in the market. Like I said, it's a different approach and we know there are legacy players that are doing something similar, right? Which is back office type of work for freight brokerages. But we kind of approach it the same way that we did when we entered the carrier factoring marketplace, providing some sort of differentiated level of service and technology. I mean, we had the benefit of a 20-plus-year-old technology that is really, really, really solid and does a ton of work. And so that just kind of brings our offering, much further, much faster than it would have if we hadn't acquired Epay. And so the plan is to kind of go to brokers and ask, hey, is this a good fit for your organization? Is there a way that we can save you some money on stuff that really isn't a revenue generating portion of your business right now? I mean, most of the brokers we talk to are hyper focused on servicing their customers, bringing on new customers, making sure that the actual meat and potatoes of what makes a freight broker is going according to plan, right? That their servicing of their customers' freight is really the primary objective.
Yeah.
So if there's an opportunity to take and save costs on that back office piece, that's where we feel like we can provide value. And so we feel like the Epay workflows are already a step ahead of what's in market currently. Just because, and I won't go into the nitty-gritty details, but the ability to see what is happening on a transaction level for a carrier instead of dealing out of email inbox is a huge differentiator. Traditionally, you would email, a carrier would email an invoice over. They would hope the broker would receive it. They would hope it's for the correct amount. They would hope there are no deductions. They would hope that their detention is being processed if they invoice for that. Epay inverts that and says, carriers, this is what the broker is planning to pay you. If you have disputes or you have changes, you can log it in the system. The broker sees it. You can add detention. You can say, hey, you didn't catch my detention that we talked about. And so all of that is housed within the source of truth so that by the time that the carrier is queued up to be paid, they had to have accepted the amount that they're going to be paid. And so you're never going to pay a carrier something that they haven't accepted, which in turn helps from a customer billing perspective. Because a lot of brokers we talk to, let's say 45 days down the line, you pay a carrier and they say, hey, you forgot to pay me for my detention. I sent you the receipt and you didn't process, or I sent you the in and out times and you didn't process it. The broker then has to make the business decision. Do I come out of pocket $200 and make the carrier happy because I messed up? Or do I go to my customer and risk pissing off my customer because I'm coming back 45 days after I've been invoiced originally with a $200 addendum charge? So all of those essentially go away because you're all operating out of the same source of truth. And there's an elevated level of transparency. I mean, for perspective, like I said, I alluded to this earlier, but like one of the main reasons we liked it is because we've approached it very similarly on our side, on the carrier factoring side. In 2017, 60% of our invoices that we received from carriers were emailed. Emailed into us. We did something very similar. We used to use these legacy products, the email kind of fixer-uppers in the past. And today, less than 1% of our invoices are submitted via email because carriers value the transparency of being able to go in, upload it themselves, tell us how much they want to be paid, right? Which is a huge, huge benefit. You're not having to read this stuff off of documents, and then they can see exactly what's happening. If there's an issue, if we reject it. And so those kind of foundational principles were very, very similar. And it's just something that I think, especially as you scale a broker, you don't want to have to worry about having to hire a ton of human resources in your back office to supplement your growth. And so, it just provides brokers the opportunity to be able to crank the lever on customer sales and the ability to really grow their brokerage, which is what basically everyone wants to do is grow and be successful, bolt on new business, provide a higher degree of service, and just does so at a lower cost.
Definitely.
In addition to that, in addition to that, we're baking some of the things that we're already doing at OTR into the product. So like our AI and NLP work that we're doing to automate invoices, read invoices, see damages. And then, we touched on it, but working capital, Epay just is a really seamless way. So you don't have to operate out of multiple systems to be able to deploy capital for carrier payments or quick pays or whatever else you might need.
Definitely. I love how you're just like the specialist when it comes to like paying carriers and getting paid, because like back office support, like you mentioned, like the accounting, finance stuff, like that's a lot of work. That's a lot of money that like a brokerage will spend, and same with carriers, in order to have someone in house. And you never know a lot of risk, and you don't know like how the quality will go. But whereas like if you're like a reputable company where this is what you focus on, like we know that you're going to do a good job, then it's better just to hire like that.
Yeah, I mean, we think it's an area that most freight brokers don't want to go and build a core competency around. They want to build core competency and spend their time and effort on doing what they do best, which is, winning new business and servicing that business better than anybody else. And so it just frees up their time to be able to do that stuff. Yeah. I mean, you have a ton of legacy brokers that are migrating from checks. That's a pain in the ass process. And Epay just effectively moves you from checks to ACH. I mean, we have more than 100,000 carriers and factors that are already registered in Epay. And so we're already paying these people already. And so when you onboard into the Epay platform, you benefit from the fact that we already have bank account information on file. You don't have to worry about cutting checks, tracking checks, bounce checks, checks that don't deliver to carriers because they're on the road and then it gets lost or they don't have it. They're calling you up because they want the money now, but they're on the other side of the country. All that just goes away because when you onboard into the platform, you benefit from the bank account information and the bank account management from a carrier perspective, benefits that Epay's baked into the platform already.
Sure. And I know next week you're gonna have a webinar, the Epay webinar, March 28th. So in exactly a week, today's March 21st. What will be discussed in the webinar? I know we're all talking about like right now, like essentially accounting, finance, stuff like this, like a topic a lot of brokers.
How do you make that fun to show? I mean, I don't want to bore the list. You know what I mean? I don't want to bore the listeners. I'm passionate about this because, to your point, it's what we do. But like, we're going to be trying to go through some stuff that is meaningful to brokers and is something that can be consumed in a way that doesn't put you to sleep, right, immediately upon logging into the webinar. A couple of those concepts around how disputes are logged, which is something when we talk to especially enterprise brokers is an aspect that they would really appreciate because it affects their customer relationship too. So we're going to go through and to be honest, like the platform is designed to be very, very simple in general. And so the demo will be relatively straightforward. I mean, the simplicity of the design is actually one of the things that we love about it. The configurability on the back end on a broker by broker basis is where the complication comes into effect. But it's the ability to offer, we're going to show kind of various aspects of the system, the ability to offer kind of quick pays to whom and when and on a customized basis to carriers. We're going to go over a little bit just because all that is customizable and you don't have to manage it. People managing their quick pay programs now, that's a pain in the ass when you're pulling loads out of an ordinary workflow to say, hey, this dude wants a comp check or this guy wants to be paid, now, and you have to stop what you're doing to address that. All of that goes away. So we'll try and highlight those types of benefits. So yeah, we'll try to make it as engaging as we can by highlighting some specific areas. We realize that it's not the shiny, load tracking and the things that are, I would say, would excite a broker about how to service their customer better. It's more so exciting that you don't have to do it anymore. You know what I mean? The shit that we're talking about by and large is stuff that brokers don't want to have to worry about. Yep. And so we'll try to present that in a way that's that gets the point across that, once you implement, it takes it off your plate and you can spend your time and effort not talking about accounting or sitting on webinars about back office stuff going forward.
Definitely. So if any broker joins, they'll learn something, they'll come out educated, which is like, I guess, the point of webinar. So that's important. Yeah.
Hopefully they'll learn, we certainly are not going to be going over accounting principles and things like that, but just specific examples of how you could potentially save, some time or money or improve your customer relationships by leveraging the platform.
Definitely. So to finish off here, Clayton, I want to go one by one with some Epay pillars. And if you could just tell me kind of in one sentence or two, what it does, because in a simple format, because I'm looking at this and I
have no idea what any of this means.
Yeah. I don't know what any of this means. So okay. What is audit proof invoicing?
So audit proof invoicing is the concept that the carrier has to accept the rate that they are going to be paid before they are paid. Okay. So in effect, you are not having to go back and compare what you are slotted to pay a carrier and what they invoiced you. Because those two things, the carrier invoice effectively goes away in the Epay workflow. And so auto-proof invoicing presents, hey, I'm going to pay you $1,000, carrier ABC. Carrier views that, uploads the paperwork to that specific load so that you don't have to worry about wrong paperwork or wrong carrier or sifting through an email inbox. And they have to then say, I agree to be paid $1,000. This is on day 0 or day 1 post-delivery. There's an audit trail that shows that in the notes. And so there's a handshake before 28 days or 30 days before the invoice is paid that says carrier has agreed to be paid $1,000.
Sure.
And if they don't, then they can log a dispute or they can log a change request. So this concept of auditing, hey, am I ever going to get into a situation where I show $1,000 and the carrier may have wanted to be paid $1,200? That having to compare those two values completely goes away.
Okay,
that's auto-proof invoicing
really nice.
in as short as a way as I can describe it.
So that solves the problem of upset carriers calling you after they got paid for, not like understanding why they got short paid or whatever. Okay, that's great. Love it. Expedited POD retrieval.
Yeah, so this is the concept that as soon as the load is delivered, it's ported into Epay and a record. We are then going out and soliciting the POD from the carrier. They can upload it into the platform. They can send it to a specific email, which is different than the email inbox, the general email inbox specific to that invoice itself. They can fax if they want to fax.
Yeah.
We don't have a ton of those coming in anymore, but it's tied directly to the invoice. And so you're able to get the data and the documents that are specifically applicable to the load that you're trying to actually get invoiced to your customer and queued up to pay carriers more quickly, because you're not having to, once again, sift through an email inbox. A lot of that email inbox technology is built on matching, right? What that document goes to, and the matching aspect just goes away. And so the carrier is able to engage, submit the invoice appropriate to that particular load, and hopefully get your customers billed more quickly, get your days sales outstanding a little lower, get you paid a little faster.
Okay, so is Epay like integrated with a TMS? Like, let's just take a broker's TMS, like marks it delivered. Does that like send a signal to Epay, and then like OTR and Epay does that work of actually getting the POD?
Yes.
Okay, awesome.
Yep.
Cool.
Yeah.
Okay. What does seamless carrier and factor interactions mean?
So I mean, there's various areas that we're interacting with carriers and factors. Obviously, the billing process that I just described is one of them. Being able to integrate, we can also ingest invoices via FTP or API integrations with larger players such as factoring companies that don't want to have to go in and upload every single time. So that's one aspect of it. The other is making sure that the invoice amount is correct, right? So going in and being able to dispute within the platform so that there's a source of truth that everybody is working off of. And then all of your payment status, all the dates are made visible to carriers. They can go in, they can submit questions through the platform instead of emailing or calling. So all of the post-load interactions between carriers and factors are happening within the platform instead of happening in email or on phone call where nobody really knows unless your rep makes a note, right? So all of that is logged. If a carrier or factor ever has an issue or wants to submit a change request, it's logged in the system, as opposed to you pick up a phone on a random AP phone line and someone's, upset, and you have to figure out what load it is, figure out what the issue is, make a note, collaborate with someone else. That's really the benefit of kind of that interactivity of the platform.
This is awesome. Honestly, if I had a brokerage right now, or if I worked at a brokerage, this would save so many headaches. Okay, real quick, final question. You probably answered this already, but just so that we understand, this is an Epay pillar. What does centralized AR and AP management mean?
Sure. So this is a concept that the vast majority of the work that is done to bill your customer is actually done on the AP side, because you're effectively using the same documents. And so what Epay does is connects those two processes and says, all of the work that you're doing to decide whether or not you want to pay a carrier, right? And documents are being classified, what's a rate con, what's a POD, what's a bill of lading, what's a lumper receipt. You have configurable settings on the back end that determine which of those documents are then exported to AR records. And so as your team is working through the AP side of the house to say, hey, I want to approve this carrier invoice, they're doing without actually doing the AR work that says, I've classified the documents, I've approved it for carrier payment. And once again, setting based, if you approve it for carrier payment, you can set it to export to AR, which then takes the documents that you want to send to your customer. And then we can do EDI 210 or in email or mail or portal upload to bill your customers the same time without doing additional work on the AR side. So it just consolidates that work into one kind of AP focused workflow, that then the output of that is the ability to bill your customers without having to go back and do a bunch of duplicative work.
That's amazing. Awesome. Clayton, thank you so much for, highlighting Epay OTR Solutions. I think that was a very just good interview just to learn more about the offering behind it. Good stuff. Thanks, man.
Appreciate you having me on. Hopefully I didn't bore everybody with
no, that was awesome.
Finance and accounting talk.
No, honestly, I thought maybe it might be boring, but you explained it in a way that was actually interesting, kind of simple way where if someone is listening right now and they own a brokerage or they're a broker, it does give them a lot of insights into utilizing technology like Epay to make their life so much easier.
Yeah, I mean that's the concept, right? And it's like I said, we know there are a ton of there's some options out there. We think kind of our domain expertise and the fact that we've been doing it for a while is helpful.
Definitely.
Future state is continuing to integrate these things so that they're integrated already, but the less work that a broker does to facilitate back office and carrier payments when that data is already existing elsewhere in kind of the transportation ecosystem, we feel like the better. And we've been on the other side, right? The number of calls and emails and inquiries we make to brokers about verifying rates, checking payment status, and we know it's a pain in the ass and we know it's annoying, right? We would prefer not to have to do it. And we don't for the brokers that are engaged in Epay.
Sure.
So it's kind of a win-win for both sides of the transaction, and hopefully take some of those annoying phone calls and emails and questions off the table.
Good deal. Clayton, if someone wants to learn more about Epay or OTR Solutions, where should they go?
Yeah, you can go to epaymanager.com. You can certainly look me up on LinkedIn or shoot me an email. We're always available to chat and discuss anything Epay or otherwise. We have a lot of conversations with people in the industry. It's obviously a very unique time. It feels like we've been getting kicked in the teeth to a certain extent for the last couple of years. So we're excited to hopefully see a turning of the tide maybe later this year. But yeah, we're always available.
Good deal. Thank you so much, Lynn.
Yeah, man. Thank you.
Awesome. Thanks for tuning in to the Daily Freight Caviar podcast. If you enjoyed the podcast, or if you didn't, leave a review. Let me know what you think. I appreciate any feedback. If you'd like to have more Freight Caviar content, go to freightcaviar.com and subscribe to my email newsletter.